Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It's the Union Budget Day and one of those days when all of us tune into our news channel of choice, keenly hearing the finance minister's speech, while in the same process often we are worried about implications on our own personal finances. Morning JK, what are you expecting from today's budget? Expecting any relaxation in taxation?
Good morning, Swaraj. Yes, the budget is also coming on a day when the global calendar is very tight, very light rather. So markets in India will be glued on to budget presentation by the new NDA coalition government. While there are diverse expectations, broadly government efforts will be directed towards ensuring India maintains high growth rate, which is inclusive and outlines plans for long-term goals of Viksit Bharat, a vision for India in 2047. What places India in a unique strong position is its steadily improving fiscal position, aided by revenue leaping, tax buoyancy, and government's policies supplemented by rising private capex as well. So what I would expect more would be towards the rural consumption and rural development, a continued focus on infra and support for export-oriented industries as well as import substitute industries, so that self-reliance will be continuing as a major policy. Then inclusive growth. Uh, I think fiscal space is good enough for allocating more money and also for research and development, which is very key for pursuing the self-reliance as well. On the personal finances, I do not expect any major changes to the taxes. Uh, there can be some rationalization or simplifications, or some more incentives for savers, particularly on the bank deposits by increasing the limit for TDS, etc. Some such small measures can be on the anvil. But what market is also looking forward to is whether they will tinker with the long-term capital gains tax, because that's one cash cow where the volumes are steadily rising big time, and a small change in the tax also can be very highly revenue intensive. So overall, government is in a good position to present a very good budget. Markets have also been well positioned for a good budget, and a good job will ensure that they will remain stable, but for any global negatives or profit taking. Rupee market will look for areas like fiscal deficit, borrowing plans, or any measures for augmenting FDI or FI flows. Although we have seen CB, rather the RBI, consistently following the policy of keeping rupee stable, any knee-jerk swings in the rupee either side should be well contained by them. I would still put 83.30 and 75 as defining the boundaries, after the budget as well. Just a bit on the global markets. While we are, quiet in terms of economic data, we are also on the cusp of another round of central bank deliberations and actions. China cut rates yesterday, although by a small quantum, but it did have a good impact on the some of the commodity currencies. Fed and BOJ are ahead next week. Bank of Canada meets tomorrow, and a few EM like Hungary and Turkey also meet. Now, China rate cut has seen the CNH move towards 730 once again. Not exactly touching it, but moving towards that. Fed meeting is significant for their forward guidance because I don't think they're going to change the rate this month. No dot plot will be there also. Bank of Japan is keenly awaited to see whether they taper bond purchases. Bank of Canada most likely to cut again tomorrow. That's keeping the Canadian dollar on the defensive. On the overall, global markets have been, steadier. Yesterday, the stock markets have made some recovery in US with all the major indices gaining, bargain hunting in some mega caps helping, and a big rally in the European index. After Macron's party formed a last-minute agreement with the right-leaning lawmakers to win a key vote in parliament on the coming Thursday, that will open the door for French president playing a greater than expected role in forming the country's next government. So this has been taken positively by European markets, and the uncertainties addressed at least for now. As I said, the commodity currencies have taken a hit of China GDP as well as the rate cut. Rate cut actually affected because that's a recognition by the Chinese government that the economy is weak. Well, we have another light day in terms of data. US politics remains in limelight, particularly after a Republican versus a Democrat contest has gotten somewhat closer after Harris' bid for presidential nomination seems to be gaining bigger support, as evidenced by the record donations pledged on the very first day after Biden stepped aside. So we have more focus on India today, but then going forward, Wednesday onwards, we have key data from global side, the GDP, USPC numbers, PMI numbers, all. So all in all, we are starting on a very active session today. Thank you.
Thank you, JK. And of course, from today's budget, the rupee market would be focusing on the fiscal numbers and the borrowing numbers that will be presented in the budget. But overall, the budget should continue focus on its rural consumption, infra, growing exports as well as import substitution. These some themes should have some sort of traction in this budget. China's rate cut has led to some reaction in commodity currencies, while yuan itself is testing the 7.30 mark against the US dollar. Overall, things with respect to data on the global markets remained light. Politics is in the limelight, as JK mentioned, in Europe with the France, and in the US as the bid for Kamala Harris as president is gaining traction within the democratic circles. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.